Hi, we'll do some journal entries exercises in this video. We have a company and it has these transactions. We'll do here the journal entries. We have 10 transactions, and we will do as well the T account here. Okay, first the owner invested $4,000, so we will debit cash 4,000 and we will credit owner's contribution 4,000. So in double entry accounting system, we should have each accounting transaction should affect at least 2 accounts. Okay, let's continue. The owners or the management pays the landlord 3 months rent equals to $750. So we will debit prepaid rent account for $750, and because the money went out of our cash account, so we will credit cash for $750. If the prepaid rent account is an asset account, so when we need to increase it, we should debit the account, and when we need to decrease cash, we should credit cash for the amount. If you are confused, go back to T account video. We described here the difference between each accounting groups. Okay, transaction number 3, we paid for new equipment for $2,000, so we will debit an asset account called equipment for the amount $2,000, and we will, because the money went out of our cash account, so we should credit cash for 2,000. Okay, we paid for supplies for $1,000. We will debit supplies. It's an asset account for 1,000, and we will credit cash because we paid from our cash account 1,000. Okay, we purchase fuel on account. On account means that we didn't pay for it yet. Receive the fuel, but we will pay for it later. But on double entry bookkeeping, we have to affect each transaction should affect at least 2 accounts. So we will debit fuel supplies 700. If we paid in cash, we should credit cash, but if we didn't, we should credit accounts payable for the amount 700. Accounts payable is an liability account, and if you need to increase liability, you should credit the account. Okay. Let's continue. Here, cash sales. We made cash sales, so because we received money on cash, we will debit cash for 5,000, and we will credit sales for 5,000. Sales is an revenue account, so if you need to increase sales, we have to credit sales. Okay, if we have credit sales for 25,000, we made sales, but the customer didn't pay for us in cash. He will pay later, so we will debit account receivable for 25,000, and we will credit sales for 25,000. Okay, if you get the cash or made the sales on cash, as you can see the difference, we will debit cash instead of accounts receivable, but because it's credit sales, we should debit accounts receivable. Okay, we collected from customers that paid has credit sales. They paid us 6,000 later. So what should we do? Our cash increased by 6,000, but what should we credit? We have to decrease account receivable by the amount. So debit cash for 6,000, and we will credit accounts receivable by 6,000. Okay, we received advances from customers. Okay, the customer paid for services that will be delivered later in the future. So because the cash increased, we should debit cash for 3,000, and we credit advances from customers, which is a liability account, because these services are a liability on the company that have to be delivered later. Okay, basic creditors on account. So we paid creditors on account, because here we have purchased fuel, for example, on account. So now we will pay this owing balance. Here we credited accounts payable, so now we have to debit accounts payable for the amount 700, and because the money went out of our cash account, we will credit cash for 700. If you notice that in each transaction the sum of the debit and the credit should be the same. Here we credit for 25,000 and we debit for 25,000. It can't be there shouldn't be any different. You can't credit sales for 6,000 and debit cash for 5,000. It has to be in equal. The total credit should be equals to the total debit. Now I will translate these numbers into T accounts to see how we can make T accounts entries. So I will start with the first transaction here. We debited cash for 4,000 and we credited owner's contribution for 4,000. So first we have, let's make the cash account big one because we have a lot of transaction under cash, and here we have owner contribution. Okay, so here we debited cash for 4,000 and credited owner's contribution for 4,000. So in number 1 we have 4,000 and here we have 4,000. Remember that the left side is the debit side and the right side is the credit side. Okay. In the second transaction we debited prepaid rent 750 and credited cash 750. So we have another account here, prepaid rent. So we debited it for 750 and we credit cash for 750. Before each number I put the transaction number, so it will be easy for me to know each number is linked to which transaction. So next, number 3, we paid for new equipment $2,000. We credited equipment and we debited equipment and credited cash. Okay, we have another account, equipment. It's an asset account. So number 3, what was it? 1,000, 2,000, 2,000, 2,000, and we paid on cash for it, 2,000 here. Okay, number 4, we paid for suppliers $1,000, so we debit. We paid for supplies 1,000, so we debit supplies 1,000 and credit cash 1,000. Okay, so we have another account, supplies, transaction number 4, 1,000. Here 1,000. Okay, we purchased fuel on account for 700, so we debited fuel supplies 700 and we credited accounts payable 700. So we have fuel supplies, number 5, 700, and we paid in cash for it 700. Okay, done with this. Oh, sorry, we didn't pay for it. It was on account, so we will credit accounts receivable. So now we have to erase this one. And we should create accounts payable, number 5, 700. Okay. Next we have cash sales for 5,000. So we will debit cash and credit sales for 5,000. Transaction number 6, 5,000 cash sales. Number 6. Okay. Number 7, we have credit sales. So we'll debit accounts receivable 25,000 and we will credit sales for 25,000. Have a new account, accounts receivables. So in number 7, we will debit account receivable for 25,000 and we will credit sales for 25,000. Okay, next we collected from customers 6,000. We debit cash because cash increased by 6,000 and we will credit account receivable by 6,000. Okay, cash increased 6,000 and we come to account receivable and we need to decrease it. We credited it by 6,000. Okay, receive advances from customers 3,000, so cash increased by 3,000 and advances from customer decreased or increased, sorry, by 3,000. So we have a new account here called advances from customers, which is liability account. So it was, what was the number? 3,000. So cash increased 3,000 and here decreased by 3,000. Number 10, pays creditors on account 700. Okay, so we debit account payable by 700 and the credit cash by 700. So accounts payable 700, cash transaction number 10, 700. Okay, if you try to sum all the credit side on these T accounts, you will see that it equals to the debit sides of all the accounts. Okay, T accounts help us to know the balances of each account. So for example, if I need to know how much cash do I have, so I'll bring the calculator, sum all the debit side that increase cash. So we have 4,000, then 5,000, then 6,000, then another 5,000, 3,000, sorry. So the total debit is 18,000. And keep it 18,000. So we will reduce it by the credit, the outflow of cash. So we paid 750 from our cash, then we paid 2,000, then we paid 1,000, then we paid 700. So we have on cash $13,550. If we need to know any account balance, we can just sum the debit side minus the credit side, and we will know what is the balance of this account. You will see that assets account normally has debit balance. Liability account normally has credit balance. Owner's equity normally has credit balance. Revenue normally has credit balance. Expense normally has debit balance. So only assets and expense accounts will have debit balance, and we call it normal balance. If it doesn't have normal balance, we call it unnormal balance. Thank you for watching, and if you need any further help, contact us on estacademy.ca and we will be happy to help you. Thank you.